Grayscale is adding options trading to its Bitcoin ETFs today. This after BlackRock saw record interest in its iShares Bitcoin Trust on its first day of options trading. Joining me now for more, we've got Christian Magoon, Amplify ETF CEO, as part of this week's ETF report brought to you by Invesco QQQ. Christian, good to catch back up with you. Great to see you. So let's discuss this. I mean, this is a huge move potentially for Bitcoin and crypto more largely, but what is the significance of us now looking at Bitcoin related assets being able to be traded in ETF form?
Yeah, Brad, great to see you. And yeah, it was a big day yesterday for the Bitcoin community, as well as just Bitcoin ETFs, to have almost $1.9 billion of trading volume notionally in IBIT ETF options was a big deal. It's a great start, and a variety of other Bitcoin ETF options began trading today, including the Bitwise ETF Trust BITB. There's a lot of interest here, and what this really allows Bitcoin investors and Bitcoin ETF investors to do is hedge their positions if they want to, or potentially magnify the upside of their positions through using regulated options on the ETFs that hold these physical Bitcoin. So a great way to really institutionalize Bitcoin ETF trades, both bull and bear, for investors of all types, whether it's institutions or retail investors. So I think this is a good thing overall for Bitcoin adoption, as well as Bitcoin ETFs.
What's the decision tree? Like when do you decide, when should you kind of qualify whether or not you should just be holding crypto or holding Bitcoin versus holding Bitcoin ETFs versus trading options on Bitcoin ETFs?
Yeah, that's a great question. I think it starts with, where is the assets that you have? So for example, if you're in a traditional brokerage, or a retirement account, you're going to be looking for a regulated way to own these, which would likely be the Bitcoin ETFs. And then from there, depending on your qualification, you may or may not be able to buy options. That there's a certain gating process to that. For traditional OG Bitcoin investors, they're certainly using platforms like Coinbase and maybe bringing their Bitcoin on cold storage. However, they may want to hedge that exposure or may want to magnify that exposure through a regulated market like the Bitcoin ETF option market. So I think it all depends on where your money's at and what your perspective is in terms of how much you trust different forms of market, from self-custody to going to just a Bitcoin or a crypto-only platform, or to regulated exchanges in the form of Bitcoin ETFs.
And so, all of this considered, you've got another cutting edge technology that people are, investors, paying close attention to, and that is artificial intelligence. And the number of AI ETFs that are out there now that have even more weighting towards some of the semiconductor names in them. What are you seeing in the makeup and how some of those weightings are playing out and attracting the eye of investors?
Yeah, so not every semiconductor or artificial ETF is created equally. For example, you can look at certain semiconductor ETFs and see NVIDIA be double the weight of that ETF versus another ETF. Also, if you look at artificial intelligence ETFs that might comprise semiconductor stocks, maybe even hardware, software stocks, you can see also massive weightings to individual companies that have performed well over the past. We really think for long-term investors, you want to take a diversified approach when it comes to artificial intelligence. It's sort of like the internet revolution. There were some early names that did quite well, but over time, some upstarts became important to own. Also, some different market segments emerged. So really believe the approach is taking an equal weight to the three kind of pillars of artificial intelligence, which is software, hardware, and semiconductors. We have an ETF AIVC that equal weights those three different segments, and then equal weights the underlying stocks in those segments, really to give you hopefully a sleep well at night or more diversified approach to investing in artificial intelligence patience, because as we know, those companies can have a lot of volatility.
Christian, just lastly, while we have you here, and very quickly, of course, there have been a lot of retail companies to report this week. We've had the opportunity to have on Walmart. Our executive editor spoke with Target's CEO as well, and we've ultimately been hearing about more of a rush towards some of the digital investments that retail companies are making. How can investors think about this thematically and play that on an ETF level?
Yeah, so we've been investing in this space through our ETF IBIT, the online retail ETF, going back to 2016. And we really believe the biggest area of growth in this segment is online retail. So we think that you need to invest in the retail side where companies are investing the most in online retail and seeing the most sales growth. You know, Brad, holiday shopping season is coming up. We think that holiday shopping will grow by about 4% this year. However, when you look at online retail shopping in the holiday season, we expect about double that growth rate, about 8%. So we think online retail is the sweet spot. We think iBuy is the way to play it. And again, another way to own a diversified basket of companies that are primarily engaged in online retail sales and marketplace transactions.
Christian Magoon, Amplify ETF CEO. Good to catch up with you. Thanks so much for joining us here on Wealth.
Thanks, Brad.